All right, guys, what's up? Hey, it's Jimmy and Ryan back with the Financial Freedom Formula. Guys, this formula is your step-by-step solution to get out of the rat race, to live and build the life that you love. And it's really pretty simple, right? When you know exactly what you're trying to accomplish, we can set up a game plan around that. And our goal for you is to show you how to increase your cash flow or build a financial plan based on cash flow where it exceeds your expenses. Jimmy, why don't you introduce yourself to everyone?
Hey everybody, Jimmy from Joy House Properties. I'm kind of the loudmouth of the group.
And last time we were talking about taxes, and Jimmy took us down a little bit of a libertarian rabbit hole. We're going to continue talking about taxes today, but we're going to stay a little bit more in the danger zone and give you advice that you have to act on. I mean, it's imperative that you act on. So we're in step one of the Financial Freedom Formula. Guys, there is literally, what would you say, Jimmy? Probably decades of knowledge dumped into this and hundreds of thousands of dollars invested on our part to acquire this knowledge and assemble this knowledge. We've dumped it into this formula. And guys, we're giving it away to you because we want you to have a step-by-step formula to achieve your goals. It's really pretty simple. So
Ryan, if you and Brad were celebrities like Kiyosaki or Tom Wheelwright, I mean, you guys would have the best education out there.
Well, I appreciate that, man.
You just need to work on becoming more popular.
That's why we hang out with you. We hang out with Jimmy. Jimmy makes us popular. We bring the formula to you. So we're the geeks behind the door. Jimmy's the one.
And so everybody knows, like Ryan and Brad is me and Bob's fractional CFO.
There we go. There we go. So guys, we're going to continue on this. Last time we were talking about the looming tax disaster that's going to destroy your retirement. And Jimmy, you come across this quite a bit. We do as well in our practice. I feel like the majority of the American population are lied to. Now, it might not be deceitful. You know, their financial advisor might not be telling them something to inherently hurt them because their financial advisor is probably doing the same thing that they're doing. But the bottom line, we have to take a step back and we have to realize it's not working. And the longer we follow advice that's not working, the further down a rabbit hole we're going to get to where our entire financial plan will literally be destroyed and blow up on us. And what is the inherent most common financial advice out there? Where are we told to put our money today, Jimmy?
You're told to defer taxes for the long run.
You got it.
And I think that's a great plan if you plan on being poor when you retire.
Boom. That's the thing right there. What is the lie, the tax lie that your CPA is telling you? Your CPA, think about it this way. What is your CPA paid to do? Your CPA is paid to give you results today. And if your CPA can come to you and say,
they're paid to not go to jail for the tax returns that they sign. They have no incentive to do anything outside the book. Sorry, going back down the rabbit hole.
No, but you're right. But even on the surface there, I mean, your CPA wants to come to you and say, hey, client, I just saved you XYZ on taxes today, right? Because we put money in a 401k or an IRA or a tax-deferred vehicle. But the biggest lie that CPA is telling you is that you are going to retire in a lower tax bracket than you are today. So why is that a lie, right? The tax bracket, let's see, they want to show you value today. Okay, so here's the next thing. When you retire, today, what are your biggest tax deductions? Jimmy, you deal with people all the time that are talking about taxes. What are people's biggest tax deductions today?
Depreciation on property.
Boom. So their residence that they own, right?
Right. Or any investments, any property, any investment property they own.
Right. So investment property, your primary residence. I've got 3 kids. I get a tax deduction on my children. I've also got, what else? So, I mean, my mortgage, most people are contributing money to an IRA, but think about this. You're saving for one specific purpose. One day you're going to retire. And in the future, when you retire, what happens to most people's deductions? They're gone. Their kids are gone. Their primary residence is paid off. They're not putting any more money in a 401k or an IRA. So they're losing all of their deductions, and everything that they'd saved up to that point is then pulled out of their IRA at ordinary income. So
let me stop you there. Only a sucker would pay ordinary income on investments.
Yes.
I don't pay ordinary income on real estate. If you sell options, if you invest if you're a trader in the stock market, even if you carry, even if you're trying to get dividends paid from stocks, not in a qualified plan, you get taxed at capital gain trades.
You got
Only a sucker would take all the risk and then get taxed like an employee. My biggest problem with the qualified plan and 401k is that you take all the risk, and then you are taxed. You're not taxed like an investor. You're taxed like an employee.
You got it. And
it might be compelling to do a qualified plan if you would be taxed like every other investor. But I think that's how they really screw people.
Well, it's just this facade. I mean, and here's the thing. You know, we're talking about taxes will probably stay the same, right? If you and I, Jimmy, were to take a bet today, and we were to say, okay, I bet that taxes are going to go up or they're going to go down, which side of the bet would you take?
I would say they're definitely going to go up.
Okay, is there any precedent for that? I mean, most people today would assume that we're in probably one of the highest tax rates ever, right? And we have a very short-term memory on this. But here, this graph right here is produced by Todd Langford. He produces awesome software called Truth Concepts. And he gives us a look at the historical tax rates. Now, this might not be of any interest to you, but it should be, because here is the lie in the facade, right? When the tax rate came out, when the federal tax rate came out, it was supposed to be a temporary tax, right? Temporary money coming in on the highest income earners of America.
It's supposed to be only a tax at the one. To get it passed as a constitutional amendment, they said it would only affect the top 1% of earners.
You got it. And what you'll notice here, you'll notice this graph, and it shows the red line, which is the top marginal tax rate, the rate that you could be taxed on at the very highest amount of income. And you'll notice back in 1913 when the taxes came out, if you were a high-income earner, you had the opportunity to pay about 7.5%, 8% of your highest dollar earned as taxes. But what you'll notice is immediately after taxes coming out, that shot up, right? Dramatically, right? You could now be taxed as high as 70%. Came back down, went back up, and you'll notice from the 1930s all the way over here to the mid-1970s, if you were a decent income earner, you had the mandatory obligation to pay upwards of 90% of your income in taxes. 90% of your income. Can you imagine that? Paying 90% of your income to taxes? Ronald Reagan actually came into office and he kind of changed this. Ronald Reagan was an actor before he became the president, and he notoriously would only do 2 movie productions every year. He had plenty of capacity to do more, but for him, if he did more than 2 movies a year, he would pay most of his income on that movie in taxes. So he came in and kind of slashed taxes. But what we notice down here, here's our current tax rates, right? And historically speaking, we're in some of the lowest tax brackets in the history that our country has ever seen. So the question is, whoops, now we made our formula really small. The question is, will taxes go back up? What do you think about this, Jimmy? Is there any precedent for taxes to go back up?
Yeah, I mean, they're going to go back up. But even if they don't, I don't really care. Yeah. I am still stuck on the fact that only a sucker would pay ordinary income tax on investments.
Okay. Let's actually consult David Walker. Okay, David Walker, this is an interesting person to take advice from. David Walker used to be the former comptroller of the U.S. government. So if you don't know what a comptroller is, he's basically the CFO of the government. He had the look behind the curtains to see everything that the government was doing, and he served under the Clinton administration and the Bush administration. And after the Bush or the Clinton administration, he left the Oval Office, he left his position, and he started sounding the alarm. And the alarm, his solution is, he says that the tax code, the tax problem, is based on a 4-letter word. So Jimmy, we are recording this, but what 4-letter word could maybe fit in to be the crux of the problem of the tax code?
Debt.
Could be debt. It's actually math. This is spoken like a true CPA, right? So we're going to end with this. Here is the math, right? So back in when this study came out, let's see if I can make this a little bit bigger. All right. Back in 2012, when this study came out, all of the taxes that the government collected, all of the taxes that you pay, Jimmy, I pay, everyone paid, it went to 4 places. 76% of every dollar collected went to 4 places. Social Security, Medicare, Medicaid, and interest on the national debt. And what David Walker said is if things don't change, right, if things don't change by the year 2020, based on our math problem, 92 cents or 92% of every dollar that comes in taxes will go to these same 4 places. So from 2012 to today, our national debt has gone up by trillions of dollars, which means our interest is going up. More people are retiring, which means more stress on Medicare, Medicaid, and Social Security. We are not far away from the position where the government will be mathematically forced to do one of 2 things. cut services, which I don't know any politician that's willing to do that, maybe Donald Trump, or increase taxes. And what David Walker said, this is the scary reality.
Wait, and the third option, print more money.
Print more money, which is the silent tax that we'll talk about as well. But
which also makes whatever you've accumulated inside your qualified plan and haven't realized the gain worth even less.
It's getting destroyed. Getting destroyed, 100%. We're going to end with the scary reality. And guys, I hope we're scaring you into the fact that traditional financial advice, you putting money into the 401k, following your CPA's advice, is the last thing you want to do. Because what are you saving for? Jimmy, what is the purpose of all long-term savings? Why do we save money?
I mean, I only save if there's a liquidity crunch.
Okay. What are you looking for from your investments? You said it in your last one. You're looking for cash flow, time.
I mean, I want to realize my gain. I want to take my chips off the table.
Boom. Today, right? That's the whole purpose of savings. The more you put your money in a deferred vehicle, like a 401k, we're just hoping.
Oh, wait. Those aren't even savings. You're speculating in the stock market. You're hoping the value of that stock will go up. You are not saving. You're speculating.
You got it.
You're taking all the risk for a very minimal return. It's a very, Nassim Taleb would call it a skinny tail investment.
And that's not what you want to be in. And we're going to leave you with one scary number. David Walker says, if things don't change by the year 2020, we're in 2017 at the recording of this video, if things don't change, one of two things will happen. Government has to cut its spending by 50%, or they will have to double the tax rate. Double the tax rate. Now that sucks today, but imagine if you're putting all of your money in a tax-deferred vehicle and all of a sudden taxes go up 50% in retirement. What just happened to the golden years? They disappeared on you, right? Okay, guys, this is
you finally realize you're getting hosed.
You're getting hosed. Guys, this is the financial freedom formula. Jimmy, why don't you tell everyone what they can do to get access to this?
I forget where they're supposed to tax, but they should tax, and they should visit Cashflow Tactics on Facebook, or they should visit our website, cashflowtactics.com. What's the number to text, all right?
Text cashflow, one word, to 797979. So cashflow, one word, to 797979, and you'll get access to this financial freedom formula with all of these hints, resources, and tools in there. But guys, it's all about you getting the right information and then taking action. So we look forward to talking to you again on the next video, and we'll go from there.
See you, buddy. See you, everybody.